Hi friends, my name is Mervin Fernandez. I am a chartered accountant by profession, qualified from the Institute of Chartered Accountants of India. In this short video of mine, I am explaining to you what are the golden rules of accounting. Accounting in simple words is a recording of each and every financial transaction that occurs in an entity or a concern. Whenever a transaction occurs, that needs to be recorded into the books of accounts, which is done using a double entry system. In this system, an entry is being passed which has two legs. One is the debit aspect, second is the credit aspect. Now, which account has to be debited and which account has to be credited is guided by the golden rules of accounting. Before we go into the rules of accounting, let's see what are the different types of accounts that are prevailing. First, personal account, second, nominal account, and third, real account. Let's go one by one. Personal account is the account of all persons including natural persons, artificial person, and representative person. What is a natural person? Natural person is none other than a human being, myself, yourself, Mr. A, B, C. Artificial person is a person that has been created by a law, a regulation, a statute, or an act. It can be banks, financial institutions, charitable organizations, limited liability companies, or partnership firms. Now, representative person. Representative person is an account which is directly or indirectly related to a person. For example, outstanding salary. Outstanding salary is the salary that needs to be paid to someone. So, this comes under representative person because ultimately the salary is payable to a specific person. So, personal account includes natural person, artificial person, as well as representative person. Let's come to the second type of account, nominal account. Nominal account is the account relating to all incomes and gains as well as expenses and losses of a concern. What are incomes? Incomes are all the revenues that the concern earns, like your sales revenue, the rental income that you receive, the commissions that you receive, the bank interest that is earned, all this comes under income. And gain is, for example, you have sold a property or equipment. You attain a profit on that sale of property. That is a gain for the concern. Coming to expenses and losses. Expenses are salaries, commissions that you pay, rental charges that you pay, electricity charges, telephone charges, your purchases, all these are expenses. And losses can be the losses that you have incurred due to natural calamities, flood, theft, or a loss on sale of a property and equipment. So, nominal account is incomes and gains, expenses and losses. Now, the third type of account, real account. Real account is the account of all the material assets of a concern. Assets are all properties and things that are owned by the company or the concern and is used in the company for generating a revenue. It can be tangible assets as well as intangible assets. Tangible assets are those that can be seen, felt, touched and measured. Examples are furniture, stock, property and equipment, computers and equipment, etc. Now coming to intangible assets. Intangible assets are assets that can neither be seen, felt nor touched, but it can be measured. Examples of this type of assets are patents, goodwill, know-how, etc. Now we have seen all the three types of accounts: personal account, nominal account and real account. Now let's go to the golden rules of accounting which is applicable to each type of account. Personal account debit the receiver and credit the giver. That is a golden rule that has to be applied for personal accounts. Nominal account, debit all expenses and losses, credit all incomes and gains. Debit all expenses and losses, credit all incomes and gains. Coming to third type of account, real account, debit what comes in and credit what goes out. I repeat, debit what comes in and credit what goes out. So now we have seen all the three types of accounts and what are the golden rules applicable to each type of account. So whenever a transaction occurs in a concern, we need to remember three things. One, we need to understand what are the accounts involved in the transaction. Second, identify the type of account. Third, apply the respective golden rule. Once these three steps are followed, your journal entry is ready. So let's take a couple of examples so that it becomes more clear. First example, paid an amount of 10,000 to Mr. Ram by check. We have paid an amount of 10,000 by check to Mr. Ram. Here we need to first identify the accounts. What are the type of the accounts involved? What is the rule? So here the two accounts that are involved in this transactions are Mr. Ram and bank. Mr. Ram is a person, natural person coming under personal account, and bank is an artificial person, that too coming under personal account. So what is the golden rule applicable to a personal account? Debit the receiver, credit the giver. In this case, Ram is the receiver of the money and bank is the giver. So Ram debit 10,000, bank credit 10,000. Your entry is framed. Second example, paid electricity charges by check 5,000. Identify the accounts. Electricity charges is one account, bank is another account. Now the type of account, electricity charges is an expense which falls under the nominal account category, and bank we have seen it is an artificial person falling under the personal account category. So there are two types of account in this transaction. One is a nominal account, the next is a personal account. So apply the rule of nominal account, debit all expenses and losses, credit all incomes and gains. Electricity charges is an expense, so that has to be debited, and personal account the rule is debit the receiver and credit the giver. Bank is the giver in the transaction, so you have to credit the bank. So your entry is drafted. Electricity charges debit 5,000, bank credit 5,000. Entry is clean. Yet another example, purchased furniture for an amount of 3,000 by cash. Identify the accounts. Furniture is one account, cash is another account. Identify the type of account. Furniture is a tangible asset falling under the real account category, and cash is also a tangible asset falling under the real account category. So the rule of accounting that applies here is that of the real account. Debit what comes in, credit what goes out. So here furniture comes in, you need to debit furniture, and cash goes out. So you need to credit the cash. So your entry is drafted, furniture account debit 3,000, cash account credit 3,000. So these are few examples that has made you clear on what are the golden rules of accounting. Based on these examples, now you are more clear on what are the types of accounts, what are the golden rules applicable, and how it is applied and how the entry is being framed. Hope you have understood the whole concept of the golden rules of accounting. Hope to see you in yet another video. Bye bye.